It's a major transaction. It's the biggest transaction that we've done in 20 years, as you've said. It transforms our lower 48 business. Our investors have asked a lot over the last recent years as to where we will go with the lower 48. It gives us premium positions inside both Eagle Ford and Haynesville. And most importantly, though, it gives us a really sweet spot inside the Permian Basin. So I think this actually transforms our lower 48. And really importantly, because we've talked about this before many times, it's accretive to shareholders. It's accretive both on an earnings basis, a cash flow basis, at relatively low oil prices. And of course, as we close this deal, and we plan to close the deal at the end of October, we'll hit the front end of the oil price curve at prices significantly above what we've assumed in our assumptions. So it's a good deal for the company.
Brian, take us inside the room when it comes to oil prices and the way you map them out. Meaning, you said it works at low oil prices. At what low oil prices does this transaction work?
This transaction will work all the way down to $2.25 Henry Hub gas prices and $40 a barrel realized prices inside the lower 48. And
was any of this, in terms of your thinking, I mean, we've obviously seen oil prices move higher. You know, I mean, you're looking at the chart there, right there, over the past year. It's been something to watch.
Yeah.
Did that impact your decision at all? I imagine it must have.
No, actually, this has been our #1 target now for the last 2 or 3 years. As we brought in lower 48, we transformed. We brought in a new team 4 years ago. It's a world-class team. They've done amazing things with the assets that we have today. We've looked at how we could enhance that business going forward. It's actually not been driven by where we see the oil prices today. We're still planning on the assumption of $50 to $65 a barrel going forward as long-term prices. And so all that means is we'll get some upside potential from these assets from day one.
And in terms of building out an upstream business here, you know, how important is this piece? And by the way, was there any other businesses you were looking at during this period?
This is, well, if you look at Permian, it's the one place where we were underrepresented. We didn't have a position there. The United States lower 48 is probably one of the most prolific basins we've seen in the last 5 to 10 years. I think it was important that we could get in there in terms of with a team that we've proven in the last 4 years. They've significantly improved our operations of our existing businesses. And this is probably one of the most attractive assets out there that you could see.
The reason I asked is I was just curious whether there have been assets in the U.S. that you've thought or wanted to buy, but given the Deepwater Horizon situation, perhaps decided, you know what, we're not in a position to do that now. I mean, is there anything to be said about that?
No, I think what we've found over the last couple of years is we've now repositioned the company. I think we understand what Deepwater Horizon looks like in terms of the liabilities going forward. We've just gone through a major oil price correction, which, you know, we've talked about before on this program, which is, you know, prices have gone from 110 down to $28 a barrel, restabilized around 50. Everybody has had to get capital efficient. Everyone has had to drive down costs. We've now got the company back into a more level, even playing field going forward. And the timing was just right for this asset. Sometimes assets come up in the right time in the cycle, and these appeared exactly in the right moment in terms of where we were financially and where the company was in the outlook for the company. And this will actually enhance future cash flows. And in fact, we've put our target for our upstream up by $1 billion off the back of this out to 2021 on our existing targets.
Brian, I'm reading a story where one of the sub-headlines is BP shares fall as analysts say the deal is better for BHP. How do you counter that?
I think the market's still trying to accommodate it. Oil prices are down this morning. When I last looked at it, the shares was tracking roughly where the oil price was. I think the market will need to fully absorb. There is significant upside value in this deal. There's a midstream business that comes with this, which I don't think the market has fully appreciated. We had an investor call this morning where we took them through that, and we'll be on the road next week with investors. And the market is still trying to absorb the deal. From our perspective, there is significant upside in value. And as I said before, you asked about other assets. It's been tough to find deals in the lower 48 that were accretive for shareholders. This one's accretive with significant value upside.